Hello, this is Barney with Russell Real Estate, and today I wanted to go over an article from the National Association of Realtors, which breaks down a bunch of statistics, including median days on market, how many properties are receiving multiple offers, how many properties are bought with all cash, so on and so forth, and then compare it to some of our local statistics here in Northeast Ohio. So the title of the article is Multiple Offers Ease as Affordability is Further Eroded. And this came out a couple days ago. Again, it's on the National Association of Realtors website. And just jumping right into the charts, the first chart I wanted to go over was the median days on market. And essentially, nationally, they're saying the median days on market for a house to sell is 16 days. So this is up from 14 days the past couple of months. But just in comparison, back in 2011, it actually took houses 96 days to sell. So a little over 2 weeks for the median days on market. And again, that is going to differ a little from the mean or the average days on market. So just depends on the area. But just taking us to our local market, I ran the statistics here for Brunswick, Medina, and Strongsville City Schools. So any house listed, so single family, condo, townhouse, anything like that, listed within those school districts, and just kind of showing you where we're at right now for September compared to where we've been throughout the year. So the last 12 months. So basically, as you could see, starting last year in October 2021, we were actually at 10 days in October. It jumped up a little November, December, and then January and February are typically the slower months of the year in real estate, especially here, just because not many people want to move in the middle of winter. But then you saw as the spring market kicked in and the summer really started rolling, the median days on market were less than a week. So it was an extremely strong market despite having high interest rates. But we are starting to see that slow down again. We're at 10 days for our median days on market, so definitely better than the national average, which again was at 16 days on market. And then our average, which is going to differ a little, the average is typically going to be higher because sometimes you'll see houses that have been listed for sale for 6 months and haven't sold, or for 365 days that haven't sold. So that brings the average up a little bit. But we've been holding steady for the past 4 or 5 months of between 2 to 3 weeks, essentially, for the average days on market before a house sells. So that was the first statistic that I wanted to show. The next one was average number of offers received on most recent sales. So this was actually basically a poll from the realtors. And they said that on average, the number of offers they received on their most recent sale was 2.5. I actually have 4 properties that have gone under contract or closed within the past few weeks. And I can tell you just anecdotally, we had 3 offers on one, 3 offers on another, 8 offers on another, and 2 offers on one as well. So we are, again, anecdotally, I'm definitely seeing more of a slowdown on the average number of offers being received compared to last year, especially in the summer of 2021, when if it was a good house priced right, you could typically see, almost 10 offers on average for a good house there. As far as the amount of buyers that are waiving their contingencies, the blue line here indicates buyers who are waiving their inspection contingency, and it looks like we actually peaked out at about 30% back in June of this year. Again, that's when we had that crazy competitive market. So if you're looking at the median days on market for June in our area, it was at 4 days. So a lot of buyers were waiving their inspection contingency, and then it was actually, they were waiving an appraisal contingency as well. They went up to 32% of buyers were waiving that appraisal contingency in June. Now those numbers have dropped basically 8 to 10%, and you're seeing just over 20% of buyers waiving either their inspection contingency or their appraisal contingency. So it is still a seller's market. Again, despite what many of the headlines are saying, sellers still do have a slight advantage, but the market has been shifting pretty quickly over the past couple of months, where I can definitely see buyers having more of an advantage, or they don't have to give up quite as much to get under contract. As far as the cash buyers, I thought that this is actually pretty interesting. But basically, you're seeing cash, a lot more cash buyers now over the past couple of months. But I figured that, see this number right here back in February of 2022, it peaked in February for all cash buyers. I actually thought that it would be higher now just because interest rates are much higher. So for those people who do have cash, it would be more advantageous to pay cash, hopefully get a deal, instead of paying, 6% interest rates or whatever their number would be, as opposed to, last year when we're looking in 2021, 2020, like interest rates were so low then that it almost made more financial sense, except obviously to get the deal done sometimes. But it would make more sense, I would think, to actually get an interest rate when interest rates were extremely low then. As far as foreclosures or short sales are concerned, again, you may hear that foreclosures are up 100% compared to last year, but you could see 1% of all sales are foreclosures or short sales right now. So it's very few, and that's just because so many people have equity that if they are in a bad financial position, oftentimes they can put it up on the market, even selling it as is, and still walk away even or on top, as opposed to ruining their credit. And then this is not really too shocking, but you could see non-primary residence buyers. It basically peaked in 2021, where there were people buying, whether it's more investment properties, whether it's a vacation home, but there was a lot of money to go around because money was cheap as far as borrowing. But with interest rates going up, fewer and fewer people are buying second houses, again, whether it's as an investment property or as a true vacation home. And then as far as first-time home buyers are concerned, typically you would want to see this number closer to 40%, 30 to 40%, but the first-time home buyer share has been going down a little bit recently. And partly that's just because, unfortunately, they're buying in a very expensive time. Home affordability, I heard a stat that it's actually at its lowest in about the past 40 years. So basically since the 80s. And the reason for that is home prices are still very high and interest rates have gone through the roof. So it's much harder for people to basically buy their first house when they're not getting equity from selling another house. So, or maybe they're not as established, obviously, being younger or being a first-time home buyer. So yeah, unfortunately, first-time home buyer shares are down, but these are the numbers that we're looking at right now. Just figured I'd go over some of these statistics, and I find them interesting. If you don't, that's not a problem. If you have any questions, feel free to reach out, and I'd love to help. Thanks.